Coming up, Chris Weston is with us from IG Markets this morning. IG in Melbourne, I should say, Chris. Waiting for Transfield shares, but we can already see Fleetwood, which was actually out with a profit warning late yesterday. The shares plunging 30%. So how's the sector going to track today?
Yeah, it's going to be a very, very tough day. I mean, it's probably a tough night for the analysts, to be honest. The people who have to stay behind and get a announcement at 6:30 at night or whatever time, as we saw Virgin the other day doing a very similar situation. So they'll probably be working through the wee hours of the morning, repricing their models. But yeah, we're going to see a pretty dark open for Transfield. I mean, we're seeing that in the pre-match down about, well, 9% or so. That's going to open 9–10% lower. And of course, we just mentioned there Fleetwood, which is down about 30% now or so. So yeah, pretty dark day. I'd imagine Monadelphous, and well, we've already seen a number coming out of this space, and a lot of bad news has been priced into these names. Yeah, I think it's going to be a pretty tough day, and yeah, I think all-time lows of Transfield will probably be in focus now. The 2005 lows or 2008 lows, I think, were about 120, so potentially they could come into play sooner rather than later as well.
Just put Fleetwood into context. You know, the word marginally below numbers reported in H1 was used yesterday. Do you see the selling as perhaps overdone early on?
Well, not really. I mean, I think this is one that everyone's loved, isn't it, Carson? I mean, every time I turn on Your Money, Your Call, there's someone saying, you know, it's got the best return on equity. You can get 24% return on equity. It's got consistent earnings growth, and it's trading on a reasonable multiple. But yeah, I think this has got very high fixed cost. It's obviously got extremely huge leverage to the mining space. A lot of what we're seeing is a lot of what their assets are in Western Australia. Of course, they have locked in some contracts with Rio as well, but. Yeah, I mean, what did they get in the first half? The first half, I think, the first half they recorded reported net profit of about 5.1 million. So you'd assume there'd be somewhere about 3 or 4 million. So let's assume their full year numbers are around 8 million. That's about an 80-odd% downgrade or drop from the previous corresponding period, and you're looking for revisions by most analysts somewhere between 25 and 35%. So clearly, this is a sizable drop for a stock that has been, you know, significantly loved. It has outperformed some of the other mining stocks or mining services names. I think pre-market it was down about 22%. And I think probably the biggest situation for me now is what happens with the dividend. You know, these guys have got a pretty high dividend yield, well above 5%. Is the dividend yield sustainable, or is the dividend sustainable longer term? Because it has been a pretty good income play for quite some time. You know, I look at the occupancy rate.
Perhaps that answers the question of, you know, why you've got a 30% drop as opposed to, you know, if you just look on the headline numbers, maybe it wouldn't be as big as that. That dividend element probably explains it.
Well, that would be one of the reasons. Of course, the earning cut and the potential for a dividend cut. I'm merely speculating there, but that's one of the things that you can do, of course, to retain your capital position. If you look at Gladstone as well, yeah, I think there's been a number of analysts who have revised their occupancy rate for the units they've got up there from somewhere around about 1,000 with the maximum occupancy rates to their Gladstone products, probably down to about 350. So of course there's issues going through there as well. So yeah, I think this is a stock that had been loved by some of the longer term money, some of the sort of investors, and we're seeing clearly people looking to dump that on open today.
Chris, let's switch and let's talk about the Fed overnight. You know, just as a bit of a curtain raiser to Ben Bernanke, Charles Evans, what caught your eye?
Well, I don't know what your guests have been saying about Charles Evans, but I've heard people saying his comments were dovish. Right. I've heard people saying his comments were hawkish. I look at the S&P myself and I see that the S&P was falling into his comments and then continued to fall after his comments. I think the key situation for me is if you actually look at it, he really didn't show any major concerns about the big miss they've shown to inflation. Now, he did mention and bring up the Minneapolis Fed, Mr. Koshalakota's recent comments, and was empathetic to his cause, where he said potentially because of the big miss to inflation, you could see an increase to asset purchase. But on the whole, I don't think he showed a massive concern about inflation. In fact, he thought the US was doing very, very well. So he believed that the US would be growing at 3.5% this year if we didn't have the fiscal drag. He wants to see escape velocity of 3 to 4%. Now, I think escape velocity is a term that they coined out of Star Trek, but it's going to be one of those words I think that we're going to hear more and more of. You know, kicking the can down the street, the new normal, these kind of phrases that we use in the media and on the trading floors. I think this is one that we're going to get a lot more I suppose, focus going forward. But, you know, if you work on that, he wants to see a sustained recovery in employment, probably wants to see another 3 or 4 months. I actually think the minutes or his conversation was slightly more hawkish than the market anticipated. We still saw a big rise in gold, but I think that big gold had certainly been rising into Evans's comments. And Evans is a well-known dove, so these comments for me probably a little bit more hawkish than the market been expecting. But yeah, I've heard people saying they were dovish, heard people saying they were hawkish, but the price action suggests to me, on the S&P at least, that they were slightly more hawkish than the market anticipated. Now, Bullard comes out tonight at 1:30. He's probably sitting on the sort of side of dovish, slightly centrist. And I think if you look in late April, he's already come out with quite dovish commentary that they could look to ramp up their asset purchases because of the big inflation miss. So there's a possibility that Bullard could come out with some comments which could see the US dollar coming off and obviously see gold coming up a little bit as well. So stocks, you get a bit of a bounce on that as well. Dudley, very key member of the Fed. Of course, we know he's a permanent member. He's a core member with Yellen and Bernanke. He comes out at 3:30 around that kind of time. Will probably be all nicely tucked up in bed, but the comments he comes out with will probably be more centred around the Fed leadership, because we know that Bernanke steps down on February 1st. The front runner at the moment is very much Yellen, who's obviously a dove as well. So there could be some conversations about who's going to be the front runner there as well. So if we get a firm description that Yellen's going to come in, the market might enjoy that, because we know that Yellen's a big advocate of easier for longer. So yeah, big night for Fed last night. I think on a long-winded rant there, but I think Charles Evans probably just a little bit more hawkish than the market been looking for.
And of course, you didn't mention the wild card, which is Tim Geithner, maybe putting himself forward. That is.
Well, he's been under a bit of pressure of late, so I think, you know, Yellen, if you're on the bookie side of things, Yellen would still be your favourite there.
Okay. Look, we are just watching Transfield shares, Chris, in the wake of what you were telling us earlier, plunging 16%. So that's kind of consistent with the pre-market trade, right?
Yeah, look, I think the market was certainly positioned below their expectations. I mean, look, 85 to 90 million was what they previously said. 62 to 62.5 is what they've come out with. Now, you know, if you look at consensus earnings pre-market, they were at 73 million. So the market was positioned for slightly lower numbers anyway. But you know, if you look on this is some 15% below what they were calling for, you know, where the market was positioned. So they are slightly shocked. If you look at the stock, it obviously had been falling into this announcement. I don't think it necessarily surprised anyone, given what we'd heard from Monadelphous, UGL, the range of different names. But I think, you know, the market was certainly, from a consensus perspective, positioned above where their downgrade is today. So they're going to bring forward a lot of cost initiatives. 113 staff, unfortunately, are going to lose their jobs as part of that. And they are going to potentially be positioned in a slightly better light. But yeah, I think just for me, just looking at the state of play and where the market was positioned, yeah, I think you've got a situation where the market was positioned above where the downgrade has come through there, hence why the reaction.
And so what do you think is in store for Bort Longyear with the AGM today? Shares coming online down by 2%. What else are we going to, I guess, learn about the sector from that, if anything?
Yeah, we're going to be obviously drilling down, excuse the pun, drilling down into their results today, and you know, I wouldn't be surprised if we saw a downgrade today. It's considering that every other company have come out and done something similar. You know, it wouldn't be a, you know, this is a suitable forum, given it's the AGM and bits and pieces. If they were to come out and downgrade, you probably wouldn't be wholly surprised, I wouldn't have thought.
Chris Weston, thank you. Our producer Steve has awarded you the gold star for pun of the day, drilling down for Bort Longyear's AGM.
Sorry.
Thank you very much. We love it, Chris. Appreciate it.
Cheers.
You got a gold star, don't be disappointed. Thank you. Chris there from IG in Melbourne. So just to be clear, those Transfield shares